Communications workers plan a big protest in Toronto today, demonstrating against what they say are unfair government policies that could allow Verizon to come north into Canada. But there are new developments now that suggest the workers might not have to worry so much about Verizon after all. Scott is here with something, a report on what some are calling the deal of the decade. Is that how? Yeah, deal of the decade,
yep.
Because Verizon's looking to other spheres, not necessarily Canada.
No, getting more hardcore into the U.S. market, buying out its partner Vodafone, and if they raise $60 billion, this could happen. So this could be one of the biggest deals of all time, actually, at a $130 billion price tag. But here's a look at the price of what Verizon might be doing. This is a deal that could go through with its partners. So Verizon Wireless is actually a joint venture between Verizon Communications, that's the parent company, and Vodafone, which is a UK company. Now, Verizon Communications owns 55%. Vodafone owns the rest of 45%. Vodafone wants the money. They want to pull up stakes in North America, expand further into Europe, be a giant there, Germany in particular. So buying Vodafone's stake could cost up to $130 billion, and that would give them the lion's share of the lucrative U.S. market, hence maybe them taking their eye off the Canadian sort of market at this point, which leaves sort of the rally expected by the unions today. That's the CAW, the CEP, and Unifor unions protesting to keep Verizon out of Canada, saying that maybe that's going to be done all by itself.
But is that the big question now for Canada's big three? Is Verizon going to be distracted by that $130 billion sparkle over there?
You know, spending that much money, do you have time to look elsewhere? And that's the knee-jerk reaction. If we take a look at the big three stocks, that's Rogers, Bell, and TELUS, they are all up dramatically with exactly that sentiment. That's Rogers up over 3%, Bell up over 2.25%, TELUS up 2.5%. And that's the conventional wisdom, is that, you're spending that much money. Do you have an extra couple of billion left over for the Canadian markets? But Maguire Securities comes out with a statement that they think that there's a 75% probability of Verizon continuing to expand into Canada, dealing with this, and then coming up, because if they're concentrating on North America, Canada's a part of that parcel and package.
We've been watching the markets and oil prices react to the turmoil in Syria. What impact is that having today?
Well, this is a perfect example of the markets being counterintuitive. You would think no war coming out of London, the UK resolution, and also consumer confidence at two-year highs. You'd think that's a good thing, yeah? But the markets are saying no, not so much. And so we're seeing a lot of red across Europe at this point. Tokyo and Hong Kong, somewhat mixed from the trading in North America yesterday. But London, most of Europe is down, mostly on the back of oil companies, down 1%. Shares like BP, Royal Dutch, all down in trading because the price of oil is lower. Canadian dollar is wandering around positive and negative. GDP is expected out at 1.4%, a little bit slower than expected, or the last quarter anyways. And oil and gold, both negative in trading this morning.